Well, happy Monday. It is August 26th. I want to bring you the latest data here in the Austin metro area. We're going to start looking at the 5-year trends. The latest data we have is from July. We're going to talk about mortgage rates and the trends that we're seeing now there. I'm going to show you a chart that'll explain a little bit about why Austin's rents are softening in the market. And finally, we're going to talk about phase 2 of the home initiative, which has to do with lot sizes and new development opportunities here in the city limits of Austin. So we're going to look at July data. This is the latest data that we have. This is looking at number of home sales. Now, most of the data right now is reflective of the higher rates that we had for most of this year at or above 7%. And that went through July. So July is going to be looking at June buyers who wrote contracts and closed in July. We can see if you look at this point right here, orange is 2024, light blue is 2023, and darker blue is 2022. We're kind of at the same spot, pretty much within a few homes of where we were each year. This is number of sales. So it's kind of in line. Sales volume, we're a little lower, and this is total price, obviously to where we were in 2022, but pretty equal with last year. Median sales price a little bit lower, and you'll see this. We're going to look at a few counties. You'll see this a little bit lower in most areas. Not a lot though, but we're looking at the difference in price is less than 12 grand. So the median home values are pretty similar to what we saw last year, but look how much higher it was in 2022. That's really where we've seen the big adjustment is 2022 to now, not as much 2023 to now. Average sales price, same story, a little bit below last year. Total listings, here's another reason why, just lots of listings, lots of people trying to sell. They've been kind of stacking up, if you want to think of it that way, over the past few years. Not as many buyers. We are starting to feel a little bit of that buyer activity pick up. It's not going to be reflected in the data yet, but it will be a result of lowering mortgage rates. They're not low, but they're lowering, and I'll show that to you in a second. Months of inventory has been high all year, higher than last year and way higher than we saw even pre-pandemic, which was the green line right here in 2020. All right, this is going to be Williamson County to the north. And again, the orange line, number of sales, pretty neck and neck with the last few years. Sales volume, a little higher than last year. Median sales price, absolutely identical to the dollar with last year. So Williamson County, you're at the same price that you were last year. Average sales price, just a hair below. And total listings, again, much higher than we've seen in the past few years. Months of inventory is reflective of that. That's just pace of buyer activity slower. All right, we're going to look at Travis County. So Travis County, obviously, I've said this before, is Austin, but it's also Lago Vista and Lakeway and Bee Cave and a bunch of different neighborhoods east and west of Austin, Pflugerville as well. So number of home sales below where we saw the last few years. Sales volume is lower. Median sales price a little bit lower, about $15,000 off last year. Average sales price, again, just a hair lower. Here we are, total listings, but you can see they're finally peaking off. And this is June to July. We're already at the end of August and we're heading into September. So that line that we know is already coming down. Months of inventory, same thing, tightening up just a hair. So here's Hays County to the south. Now their number of home sales is higher compared to last year by almost 50 homes a month. So they had a better sales time in July. Part of that is because the price point is a little bit lower. Sales volume, again, a little higher than the light blue line of last year. Median sales price, though, lower. So the prices were still softening, but they were having more sales because of having high inventory, but also more affordable prices for buyers. Average sales price very close to last year. And again, total listings, look at just how much it is over pandemic time period. Months of inventory finally starting to peak off there. All right, let's switch over and let's go to mortgage rates. So we have a very clear trend now that mortgage rates are starting to stay in the mid sixes. We also heard from the Fed last week that they are planning to start cutting rates in September. Not sure how much, but I think it's more psychological than anything. If it's 25 or 50 basis points, it's not going to make a huge difference. What makes a difference is we now know after 2 solid years of high rates, they're going to start cutting those rates. So today, Before the markets open, we're sitting at about 6.44. That's pretty solid. I want to show this chart to you at the bottom. So I went all the way back. This is August 26th, think 2 full years ago. August 26th to basically last Friday. And where rates, how volatile they've been in just 2 years. So August 2022, this is right after the Fed in April and May started raising rates. And they went from, 5.9 within about a month up to 7.3, just shut the market off. They came back down because nobody really knew what to expect or how long the Fed was going to keep rates high. So they really were volatile, came back into the low fours, shot back up to the sevens, back to the low sixes, and then just a steady rocket ship last year up to 8%. And again, just really crushed the market, slowed it down. But over the winter last year, we started the year again. We started in the high sixes, and we thought maybe looking at this 2 or 3 months right there, finally the rates were going to come down this year. The Fed was going to have 6 cuts. There were all these news articles about the market slowing down. Did not happen. And of course, rates shot back up to the mid sevens. But finally, we're on a long enough trajectory now. And more importantly, the Fed is talking and telling us they're going to lower rates. So after all this volatility of up and down and buyers unable to make decisions, sellers unable to make decisions, how do you price your house when the mortgage rate's bouncing around a quarter to a half point every couple months? Very difficult. So I think now we're going to have a little steadier trajectory, at least maybe for the second half of this year. All right, let's talk about rents in the market. So this chart's from Yardi Matrix. They're a huge commercial multifamily vendor. And so this is year over year rent growth in all asset classes, mostly though looking at multifamily kind of heavily weighted here. So if we look at the markets that are seeing rents go back up, New York City, Washington, D.C., Kansas City, Columbus. If we look to the far right, who's been getting hit the most? Austin, Atlanta, Raleigh, Phoenix. So these are the markets where you had huge amounts of supply, meaning development, build new complexes in the market. Austin right now is number 1 in the country. Negative, unfortunately, but we added so much supply to the market. Austin was a top 3 market for building multifamily. All of those projects were started in the pandemic. They're all coming online last year, this year, and next year. So as you drive around the market, you're going to see tons of apartment complexes opening up. They are all empty. And so they're going to have to do incentives to get renters in there, which means everybody like me and any of you that own rental properties, you are now competing in a much bigger market. So it's going to take a few years to get that supply absorbed. And that's why we're seeing some rent softening in the market. One thing Austin is trying to do is they have a home initiative. This was passed earlier this year. It started in February. So the first thing is they rezoned every single family lot in Austin to build up to 3 units. There's going to be a lot of, restrictions on what you're going to be able to do. But the second phase just started last week. And so now not only can you build 3 on 1 lot, but the actual lot size is allowed to get smaller. So the minimum lot size for a single family home in Austin for a very long time has been about 5,700 square feet. They have now shrunk the lot size that's allowable to 1,800 square feet. That's a very small lot. And so what's going to happen now is, let's say you own a lot that's 6,000 square feet or 10,000 square feet. You can start by going to the city and you can ask to cut that lot up and subdivide it and maybe turn it into 3 or 4 separate lots. Obviously, there's going to be some restrictions there. Do you have easements? Is there a way to get a driveway? But if you can do that, theoretically, you could start cutting the lots into smaller sizes, building micro homes or smaller homes, and fit more homes into one space. So keep an eye on that. There's going to be some layers. We'll talk about that in more detail, maybe in some future videos. But for now, just know that the city is trying some new initiatives to try to bring more supply into the city so that it can lower a bit, maybe that starter home price for people in the market. Anyways, I hope this was helpful. Make sure to watch our videos each and every week. You can click the subscribe button on our YouTube channel to keep track of us there. And of course, if you look for somebody, if you know anybody looking to buy, sell, or invest in the Austin market, we'd love the opportunity to chat with them. Anyways, kids are back in school. We are heading into Labor Day weekend. Hope you guys have a good one, and we'll talk to you next Tuesday. Thanks.